The gift of volatility was our speaking engagement earlier this week. Could gold actually be more volatile than Bitcoin? We're going to talk about that topic of Bitcoin and where it's been moving lately, as well as government shutdowns, jobs reports, and ACA, Affordable Care Act subsidies. But as we get started, this is a financial education presentation. You must do your own due diligence on anything you hear in this presentation. More disclaimer information can be found at ankerstarwealth.com, and the opinions expressed are mine and Steve's alone. Steve is back on the show, the originator, the founder. Take it away.
Hey, everybody. It is good to be back on the show. Corey, Monday morning, talked about Bitcoin, where it is and where it's going. And then, of course, Monday evening, I did the show for the gift of volatility. And you're right. You're welcome, right? Because we've had volatility since then. Bitcoin's bouncing all over the place. Let's talk about the article that everyone's talking about. So here is this. It is there. You should be able to see the CNBC article that Bitcoin falls below 100,000. Now, good on you, or maybe you're holding on a little too tight if you actually saw this physically happen because it was after hours. But Bitcoin did fall below 100,000, and now it's back up to 102.3 is what I'm seeing on my latest updated chart here. So it's bounced a little bit, so it's not like it was the end of the world. But certainly we want to talk about the volatility inherent to Bitcoin. There was an idea there that Mike mentioned in the open, that gold was more volatile than Bitcoin. Not really true. It seemed like it because Bitcoin was holding strong for a while when gold had the big sell-off recently. But Bitcoin's doing its thing from now, since then. So let's talk about it. Here's the article. You can read that on your own. When you look at the chart, though, this is a 6-month chart. And, it's 6 months ago, we were below 100,000. And even though we go up and we touch new highs at 120 and then up at 125, I think it was 127 was the actual top there. Just realized it sold off down to 100. So that's, a 20% sell off, a bear market, if you will, in Bitcoin. Well, for the book, it's the number one holding, so we've certainly felt the impact of that. But when you zoom out a little bit to the 1-year chart, what I find instructive is the big run up right after the election. So if you imagine that it's been a long year with Trump as president, right? He's very active and he moves the market. So that's been keeping us on our toes. But if you go back to the election, right after the election, that's when we had the big run up in Bitcoin from 75 or so up to that 100, kind of stabilized at 100, another retracement all the way back down. The world is ending for Bitcoin, and then basically from 75 to 125. So the volatility is there, even though it seems like it's not what it used to be. Bitcoin used to do like 80% retracements. I don't see that happening, but certainly 20% is what you feel. When you go to the 5-year chart, it tells a little bit of a different story, right? We got in right before this area. January 11th of 2024 was when the Bitcoin ETFs hit. So for those that are long-term investors, you're up nicely. If you were one of the OGs, if you will, you got even a better entry before that. But really, when you think of any investment, much Bitcoin or anything else that's out there, you want to think the thesis and the conviction, right? So you hear us talk about that all the time. What's the thesis of Bitcoin? It's a digital store of value, digital gold. It has the potential to be a currency someday. I'm a believer in that. Most people are like, yeah, let's just stick with the digital store of value. But for the digital store of value, probably the best chart you can see out there is what's called the global money supply. So this is kind of often the econ land. But when you think of the amount of money printing that we're doing as a government and the debt spiral that we're in as the U.S., that doesn't really have a clear path out, or really any path out. If you have one, let us know. But it's we're doing it, and we're arguably the best economy in the world, and we like to say we're kind of the smartest people out there. However, other countries are seeing what we're doing and also going into debt and printing a lot of money. Well, all that adds up to the global money supply. So this is kind of separating it out from, it's measured in US dollars, but it is the global supply. And what you see here is the global supply is the blue line, and measured in US dollars. And then you see the Bitcoin price. And it's not one for one, but it's certainly tracking. And as the global money supply goes up, our anticipation is that Bitcoin's going to go up with it. So that's the thesis. The thesis has not changed. We're not solving the debt problem anytime soon. And even though the government's closed, I bet the money printer is still running. It's probably deemed essential, if you will. So stick to the thesis and hang in there during this volatile time, if you will.
All right. Well, I'll take it over to some other news that is going on, and that is the jobs report. With the government shutdown, we don't get the official government jobs report, but there's always a Wednesday ADP report that comes out. Sometimes these match, sometimes they don't, but this is the only thing we got, so we're going to go with it. I see some positives and some negatives. So first of all, the positive, companies added jobs in October. Yay! Employment jobs are going up. That is good news. On the negative side is all that job creation is coming from big companies. Even though we see Amazon doing layoffs or big layoff numbers from big companies, the addition of jobs, 76,000 came from large companies, while smaller businesses lost 34,000. So that's not necessarily a good thing. That is a in fact, I consider that a negative thing.
Right.
Smaller businesses are in the squeeze. So I just kind of put this out there. I don't think this is going to drive the market today. And I transition over to healthcare. So the government has been shut down for it's a new record. It's a new record. Trump, it was shut down, 35 days under Trump back in 2018. And now we're breaking that record. So goes that. What is the real core battle behind this? And I grabbed this article from NPR. But and we'll obviously in a negotiation, there's lots of things that they're talking about. But the real core to this, at least on this article, and my belief as well, is it's about healthcare and expiring subsidies for health insurance premiums purchased on the marketplace or the exchanges based on the Affordable Care Act. And if you remember, and I can go all the way back, in 1992, I stood outside where I was interning, and I heard a presidential candidate who actually won, Bill Clinton, say, in 100 days, we'll all have health insurance. And as a soon-to-be graduate, I was like, yeah, that sounds like a good thing. And then in 2008, slightly more than 100 days because it was like 16 years later. And 16 years later, Affordable Care Act was released. So technically, everybody did have health insurance if you signed up through the ACA or Affordable Care Act exchanges. So with that is insurance subsidies on those. So if you didn't make a lot of money, you didn't really pay for your insurance. I mean, the government paid it, shifted it around. So you had insurance and it was subsidized. So here's the battle. Back then, you'd say, well, it was Democrats versus Republicans. It was Obama versus everyone else. It got passed. And here's what happens as this continues on. These subsidies that make this they're the ones that make it affordable, because without these subsidies, I would argue it's not affordable. And then what happens is, and I'm going to go to my next article, how to navigate open enrollment. So on November 1st, this past, I think it was Saturday, the premiums were released. And here's what you see. Healthcare premiums that are outside the ACA went up 6.5%. And that's inflation. That's higher than wage growth. That's higher than anything. But premiums on the ACA went up 26%. That's really not affordable. So what you end up with, and here's a key part of Obamacare or Affordable Care Act, is people under the age of 26 are covered under their parents' insurance. Wow. When I was 22, I graduated college, I was kind of on my own.
Right.
But in today's world, up into 26, even if your 25-year-old gets married, you're still on your parents' insurance. Wow, talk about stepping into adulthood. You could get married and have babies underneath your parents' insurance. Wow, that's crazy. Not that many young people are having babies, so maybe it's not that big a deal. Continue on. And the Affordable Care Act, and I just pulled this up. This is actually from the government, where I just showed that it's required to allow them. It's like it is absolutely required across the insurance. So what does it take for this to survive? The ACA needs young people to sign up for insurance, but young people, at least young people under the age of 26, they don't have to because they're covered by their parents. So what we get into what is called a death spiral. And that's what I am going to say we are in the middle. And NPR kind of alludes to it, but they say it's looming, and I say we're already in it. So, and the subsidies just delay that death spiral. But the only people that sign up for insurance are either people that need the insurance, they are medically in trouble, and they know they're going to use the insurance. It's almost like, I'm going to sign up for auto insurance if I plan to total my car next year. Of course I'm going to do that. But what's happening is, in the people that say, I'm not going to total my car, or I don't think I need health insurance, they don't sign up. Therefore, their premiums don't go in, and insurance goes up by 26% in a year. So that's what we're in the middle. That is the core to what's going on. Now, what gets negotiated out, whether they allow some subsidies, this is where it's at. I just thought I'd give you an update. Steve, any questions on this? What do you think about this?
I mean, I don't like it. I don't have the answer, right? So obviously, this is a tough problem. How do all of us pay for all of us? It's not great. As you're describing it, sure sounds like Social Security take two, right? Where you need the young folks to get out there and work to fund that. We did just, as have our first, socialist elected to a government position yesterday. So I don't know. We'll see how all of this works out, but it certainly seems like when you see that headline of death spiral, yeah, that's not great. We're in a death spiral, so now we have a death spiral. Not good. So
it actually makes the debt spiral sound better.
right.
So
if given the choice, yes.
One early forecast, and I know we are, since Steve brought up November when Trump got elected, wow, here we are. It's like 1 year later, right? We're only 1 year into this 4-year term. It feels like it's been a while.
It does.
I will go out here and predict that this situation, back similar to 2007, 2008, during those election time, this will be a massive issue here coming up in the next 2 to 3 years. It's kind of, when ACA got passed, it felt like it kind of like, it's all, that's taken care of. We're not really talking about that as much. This will be a massive issue that we talk about. So I'm just putting it out there now.
I agree.
All right. We will continue on. Thanks everybody for tuning in. Have a good one. Bye.